Recently, a lot of friends have messaged me asking if there are any simple strategies that can generate big profits. So today, I decided to take the inside bar strategy, which many people are familiar with, and develop it into a trading system that can beat the gold market. Most importantly, as usual, I didn't write a single line of code myself. I used ChatGPT as my assistant to create all the indicators. Today, I have the results from testing 100 trades, and the outcome is a profit as high as 579% with this system. But as always, you don't have to take my word for it. Believe in the statistics. Let's take a look at the stats. Other places might not dare to offer this, but the Trade School team is bringing it to you. If you enjoy this kind of video, don't forget to like, share, and hit the notification bell so you won't miss out on great videos in the next episodes. Or if you want to receive free techniques, you can add us online at @oschool, which is now showing on your screen. If you're ready, let's dive deep into the trading system. That's it for the system testing in this episode. We've given you the full details. The equity curve is steep and looks great, just like this. I really want you all to watch this video until the end. First, I need to let you know that I tested this system on the EURUSD chart using the 4-hour time frame on the Tickmill broker's chart. Tickmill is a broker with an FCA license from the UK, which is already a top global standard in Forex. My main trading accounts are also with Tickmill. The advantage of Tickmill from my real experience is that besides having a world-class license, it also offers very low spreads plus commissions, making it suitable for both scalping and long-term trading. Both work really well. Now let's take a look inside to see what the statistics are like behind such a beautiful equity curve. As before, I used a risk per trade of 5%. The capital was $10,000 with an R of 1.5 times. The win rate isn't too high or too low, sitting at 57%. But the profit here is as high as 579.83%. And just to clarify, I tested this system from January 1st, 2022 up to the present, which is April 1st, 2025. So that's just over 3 full years. In total, there were 100 trades. As I mentioned before, when it comes to system statistics, you should test with at least 100 trades. Today, I've delivered the full amount. In the past, sometimes it was a bit short, but I want you all to be able to build on this. But for this clip, I provided a complete set of 100 trades. So, with statistics proven like this, it can definitely handle any market condition, no matter how heavy the sideways movement is or how strong the trend gets. The system can get through, as you can see. The profit factor is at 1.99 and the maximum drawdown is 18.55. That's considered neither too much nor too little. I'd like you all to try adjusting this aspect of risk by reducing the risk per trade. So, you want to see how the system actually trades, right? As usual, let's first take a look at how to set up the template. If you had an AI trading for you 24 hours a day with a system to protect your account from being wiped out, would you dare to try it? And this is AI Forex Sumo, an AI that has been in the real market for over 3 years, generating consistent profits and maintaining stability with low risk. The system includes both manual and auto stop features. Even if the account hits a maximum drawdown of 30%, there are still over 1,000 real users, both domestically and worldwide. It was developed by a team of engineers with more than 14 years of experience in the Forex market. Customers can install the trading robot themselves or have our team install it for them. Special promotion today, from the regular price of 22,000 baht, now only 13,000 baht. And that's not all. You can also pay in installments at 0% interest for up to 10. That comes out to just 1,300 baht per month. Message us today and type "interested in AI" to receive details and the 13,000 baht promotion immediately. Forex AI champion. Let the AI system make money for you. Now, let's continue by looking at how to set up the screen and what tools we need. In this episode, make sure to take notes along with me and don't write anything down incorrectly. For the EMA, I use 2 lines. In this episode, the first line I use is EMA 35. Set it to 35 just like this, and it will be the white line here. Next, the purple line below, I use EMA 100. Don't set it wrong, 35 and 100. Next is the inside bar indicator, which I had ChatGPT write for me. First of all, I have to tell you what an inside bar is. Let me explain. Let me explain simply. Inside bars are a kind of action to see a reversal, up or down. It's a short-term pressure on the price. The main principle is to look at two candles, like in the picture. This is the first candle, and two like this. The first candle, the form of the inside bar, is that there will be a candle that is larger than the second candle. The second candle will be covered. For the first bar, if we talk about the principle, the first bar will have a high that is higher than the high of the second bar, and the first bar will also have a low that is lower than the low of the second bar. This forms a pattern where a large bar is followed by a smaller bar. This is what we call an inside bar. See? For example, right here, do you see this pair? The large bar is covered by a smaller bar. This is an inside bar. Here as well, a large bar followed by a small bar. Large bar, then small bar. This is what we call an inside bar. Here, if you measure, when you see a large bar followed by a smaller bar like this, it is also considered an inside bar. I hope everyone is following along. Yeah. As for the coding of the inside bar indicator, I will be giving away the code for free. There's absolutely no charge. All I ask is for each of you to give 1 like and 1 share. That's all for this episode. In this YouTube video, I'll put the link in the description below. You can download and use it right away. So now, let's move on to the 4-step trading process. For an uptrend example, keep an eye on it. And short, pay close attention. Don't miss even a single parameter value. For the first step, you can make a note of this. It's the use of the EMA crossover. Whenever the 35 EMA crosses above the 100 EMA, like in this area, that's step 1. What's the bias? The trading direction must be upward. This is the first step. Next, step 2 is even simpler. I'm looking for a pullback, just like before. Where should the pullback go? The pullback should come to another zone. Let me draw the zone for you. My zone isn't complicated at all. My zone is simply the area between the 35 EMA and the 100 EMA right here. This is our action zone. Whenever the price moves up and then pulls back into this zone, it doesn't have to close below. Just touching the zone is enough. That completes step 2. This is an important zone, the action zone. Once we've identified the zone, I'll look for the inside bar. The indicator that I had ChatGPT code for me will display the appearance of an inside bar forming in this area. See? It's an inside bar in an uptrend scenario. It looks like this. The previous candle is a large red bar followed by a small green bar like this, which is engulfed. See? This is the inside bar pattern in step 3. But the important point I need to emphasize here is this set of inside bars, or any subsequent set that you want to trade, must be located within the zone. This is the zone. Let me draw it again. See? If one of the candles or the first candle enters this zone, that's acceptable. Good job. If the second candle enters the zone, that's also fine. Or if both candles move into the zone, that's acceptable as well. Okay? But if it falls below the zone, like in this area, it doesn't count. We won't trade it. Or if an inside bar forms above the zone like this. See? Inside bars like this, we also won't trade because the chances of the chart dropping are high. It's likely to move up and away from the moving average and then possibly come back down. In this case, we still won't trade. We only trade in zones where we have an advantage. Once you spot the 3 phases, what you need to do is take action in step 4, which also has its own details. It's not just about trading every time. You should place your order as a pending order at the location of the second candle right here. Leave the pending order there. Set the entry at the low of which candle? The low of the first candle or the big candle. Set the risk-reward ratio at 1.5 times. The important thing is the next candle. This is the decisive one. The next candle must trigger the order. If it doesn't, we simply cancel the order. Okay? This is a technique that you should really take note of. Put a million asterisks next to it if it does get triggered, like if it hits. See? When it gets triggered, that means the order is open. The pending buy stop we set here has now triggered the order. The buy is now open. But if it doesn't get triggered and instead drops down, it doesn't have to hit the stop loss. If it just drops and doesn't trigger our order, we simply cancel the pending order we set. But in this case, it's already been triggered, so we calculate the risk as usual with a risk-reward ratio of 1.5 times. Very clear. This zone gives us an advantage. See, as soon as the price comes down to test the zone, and if there's an inside bar, it looks like it's about to choose a direction, but we choose the type of inside bar that is going up, right? That supports the move all the way to take profit, just like that. Now let's continue. If we want to keep trading, we have to wait for an inside bar that forms within the zone. We don't trade inside bars that are buried like this. We only trade those that are in the same direction as the main trend, or specifically bullish Isaba patterns. You can see here that this is an inside bar pattern, right? The first candle and the second candle. See? That's the inside bar signal. The first candle is bigger than the second, and it's also green. So I place a pending order at the second candle and set the stop loss at the low of the first candle like this. Then set the target at 1.5 times the risk, just like before. What should you notice here? The thing to note is that the next candle goes up and hits the target. But if the next candle doesn't hit it, what should you do? As discussed, you should cancel the pending order. Is that clear? So you can trade as usual. Here, you'll see that the price hits the take profit first before it sharply pulls back down. So using an RR of only 1.5 is very important. I really want you all to pay attention to this part. Right here, this is a set of inside bars. Can you see it? This set here because there is a signal. The alert here indicates that this is a bullish inside bar. I've already warned you about this, right? If you come across this situation and you're not careful, if you don't check as I've taught, you might place a pending order and enter the trade right away, just like this. You see, you set the RR at 1.5 times or whatever it may be. But what's the key point here? What have I taught you? If you've set a pending order and the next candle doesn't trigger the order, so this is the first candle and this is the second one. For the third candle, if it still doesn't trigger the order, what did I teach you to do? You should close this order right away, right? So if you close it, you won't be trading this setup. Notice that if you had taken this trade, there's a very high chance you would have lost since the price dropped sharply. See? Okay, I hope you're taking notes and learning from this example. Now let's continue with a bearish example. The bearish setup, bearish, is the opposite of the bullish one. Step 1, we need to wait for the 35 EMA line to cross below the 100 EMA. Just like this, right? This is the starting point of a downtrend. But for a downtrend, we have to wait for a pullback into the zone. Can you follow so far? The candlestick needs to pull back into the zone. At this point, there isn't an inside bar yet, but it has already entered the zone. What do we have here? An inside bar, but it's bullish, so we can't trade it. We have to wait for a bearish one only. Pay close attention here. This is where an inside bar has formed, and this time it's bearish, as indicated by the red color here. Plus, one of its wicks dips into our zone here. So at this point, we can set a pending order at the low of the second candle and place the stop loss at the high above. The risk-reward ratio is 1.5 times. Next time, we just have to wait and see if the order gets triggered. Okay, here it shows that the order was triggered, so we just let it run like this. All right, moving on. Let's see what happens here. There's a pullback upwards, and then an inside bar pair forms going. This inside bar pair, in fact, overlaps with the EMA 35 and 100 zone. Can you see that? So at this point, we have to trade. We'll do a sell trade and set a sell stop at the low and place the stop loss at the high above. The risk-reward ratio is 1.5 as usual. Do everything in the same pattern as before. You don't need to overthink or do any acrobatic trading or try to measure Fibonacci levels. Elliott wave patterns or anything else you're not comfortable with, you don't need to use. Here, the order is triggered. Always check. Once the order is triggered, it hits the take profit. This one is done, another trade completed. But here, there was a loss. Let me show you the losing trade as well. This pair lost. Why? Because an inside bar formed in the zone, right? So we had to set a sell stop order here with the stop loss above, but then the price moved up, so this one hit the stop loss. But we've already won 2 trades, so losing one isn't a big deal. Trading is like being both a giver and a receiver. Whenever you make a profit, you're the receiver. But whenever you hit a stop loss, you're the giver. However, when you give to the market, you have to give wisely. What does it mean to give wisely? It means using money management. Give only a little at a time. But when you win, you should win big, just like this. So I mean, here, another inside bar formed, but it's outside the zone, so we don't pay attention to it, right? If you're careless and see an inside bar like this, you might think, wow, this looks like a good trade, and bet on it expecting the price to go down. But what actually happens? It goes up. I've already taught you that. When trading, inside bar pairs, the inside bar must hit the zone or be within this zone. This one isn't in the zone, so we don't trade it. If you do, you'll definitely hit your stop loss. I'm teaching you both the profitable trades and the losing ones here. This is the real market, and that's why there's so much variety here. This is another inside bar pair that's interesting because it fits our criteria. It's not interesting because I see something clever or have some kind of special insight from more experience than others. No, that's not it. Everyone can see the same thing. According to our second rule, both the first and second bars in this pair form an inside bar as indicated by the arrow here. Did it occur in the zone? Check the zone. Yes, it did. So there's no avoiding it. You have to take this trade, just like I did. I opened a sell position. Set your stop loss. Place your SL above the high and set your risk reward ratio at 1.5 times. With what condition? I'll repeat it again and again. The next candle must do what? The next candle must trigger the order. That's it. Okay, let's look at the next candle first. The next candle hasn't triggered yet, but what happened? A double inside bar formed. Can you see it? There's another arrow here. So what you need to do is delete the old pending order and set a new pending order at the new spot. See? This way, you'll get a larger lot size and a narrower take profit range. Here's another example for you to see. Are you keeping up? No, let's start from the first pair. They don't overlap, so you cancel it, right? That's the first pair. Now this is the second pair. In case some of you can't see it, the second pair is here. The big candle engulfs the small one just like before. The indicator gives an alert, same as before. Are you following? And then what do? I place an order right here. A sell stop for the second pair. I set the stop loss away from the first candle and then it gets triggered, right? The next candle, this follows the rules exactly, 1.5 times. This time it dropped for a long stretch, so we made a profit. It's not difficult at all. These are solid examples, both for uptrends and downtrends. There are also precautions and special tips and tricks. For those of you watching openly, I believe that if you backtest, you'll get the same trading results as I do. If you backtest with Tickmill Broker like I do. I'll leave a link to open an account with Tickmill Broker below this video. If you're interested, you can open an account right away so you can backtest on the same chart as me. Let me summarize once more before we wrap up. The technique we covered today involves using the EMA crossover. Once the crossover happens, wait for the price to pull back into the EMA 35,100 zone. One day, when you see that pullback, look for an alert from the inside bar indicator on your trading screen. For example, if you're trading a downtrend, look for a bearish inside bar. If it's an uptrend, use a bullish inside bar. Then set your pending order. Your pending order should be, you need to monitor the next candlestick. Your order should only be matched if it meets the criteria. If it doesn't match, just cancel the pending order. However, if you encounter a double inside bar, according to the rules, you should cancel the previous order and set a new pending order. This way, you'll get a tighter take profit range. Keep this in mind. A good trading system, in my opinion, doesn't have to be complicated. But what's important is that you understand the principles and maintain discipline. Indicators can help alert you, but ultimately, the decision maker is you. And if you already know how to use ChatGPT, it's like having your own personal trading assistant. So make the most out of ChatGPT, use technology to your advantage rather than becoming a victim of it. All right, if you enjoyed this and tried it out with good results, don't forget to leave a comment below this video soon. Or if you'd like me to create a different kind of system, you can also comment under the video. Don't forget to hit the notification bell so you won't miss out on great content in the next episode. For today, my team and I will take our leave. See you again in the next fun episode for sure. Goodbye.